Did you know that we're on the verge of an absolutely incredible once-in-a-generation opportunity to build wealth right now, for everyone is panicking and markets are down across the board? You can set yourself up for more wealth than you ever imagined. If you prepare yourself early enough, this 2022 to 2023 recession, it's going to be like none other. And I'm going to show you exactly how to take this opportunity to join the millionaires and even the billionaires that this recession will create, regardless of whether you've got a net worth of 0 or 10 million. There's an opportunity here that if you capitalize on correctly, will set you up to multiply your wealth, but there's something different about this recession. Something that makes it unlike any other, which is crucial to understand. Most videos won't even talk about this. I understand the implications, but I'm going to cover it in this video. What is the recession and who succeeds during one? The word recession itself is enough to bring up images of people losing their jobs, their homes, the stock market crashing, and all-around misery. So, who even profits during a recession? And how is it even at all possible to thrive in an environment like this? It's simple, really just follow the money. A recession is the transition of an economy from one that's booming with high consumer spending to one that's contracting with people and companies pulling back on expenses and leveraging when living costs like rent, food, energy rise. You have less to spend on everything else. You can't really cut back on housing costs other than moving to a low-cost area, which in itself costs money to do, but rather than buying a new pair of $200 sneakers, you glue up the old ones and you get back to working with money being tighter and debt repayments becoming more expensive due to interest rate hikes, prohibitions on the best time to finance new car or go on vacation, new clothes, accessories, household items all get put on hold while money is tight, resulting in a general decline in retail. Essentially stop spending money on short-term pleasures, because they could potentially be worth multiples more in just a few years if you simply control your impulses. With this pullback in spending, overall GDP shrinks, less businesses conducted, companies that rely on fair weather spending like a Lambo dealership. Do everything in your power to be able to continue living without having to lay a finger on your portfolio or your investments. It's way easier to weather the storm if you don't have to dip into assets while they're down in value, especially if they aren't overly liquid assets like real estate. You don't have to sell your assets or your house for a loss. Now keep this in mind, because we will come back to this extremely important factor later on in the video. The overall situation and yours, how does it compare? First, how do we even know that a recession is coming, or that we might even be in one right now? It's actually pretty easy. Among other things, the recession is defined by 2 consecutive quarters of negative growth with a 0.6% drop, and according to data released in July following a 1.6% drop back in Q1. Let's say you have no money right now. What's the best way you can prepare or take advantage of the situation? You could skip and save more money each month, pull some extra shifts, increase your income, or move in with a housemate. But I'm not here to reiterate the generic advice that you've probably heard 100 times before. This video isn't about how to save money. FastPay grew rapidly as boring-conscious shoppers flocked to their service. Ethereum was also founded during this time, seeing an opportunity as travelers pulled back from expensive hotels but still needed short-term accommodation. It started from renting out a single air mattress back in 2008 to global business, with nearly $70 billion today, and actually more. Almost every discount retailer, grocery store, and industry-disrupting service you know about today started during a recession, cutting huge chunks of market cap out of large businesses. We struggled with decreased revenue. A recession is exactly this, a rebalancing of wealth. Inefficient and over-leveraged businesses and ideas will get strung out and shaken up by and comers taking their place. The faster you can execute, the faster you can start generating cash flow. So I don't mean immediately go out and try and build a business with a heavy startup cost like a physical product business or a software company, unless of course you have the capital to bootstrap that and get it up and running as fast as possible. I'm talking about service-based for digital businesses that often require little to no startup cost. And you can literally do it from whatever device you're watching this video on. Right now, if you have access to the internet, you have no excuse. Now, how do you invest during a recession? One of the best ways to build wealth during a recession, especially if you already have a stash of money prepared, is to carefully rebalance a strategic portfolio. Investing during a recession is not just about finding growth in a contracting market, but understanding which phase of the recession we're in. I would say right now, we're still in the early stages. The economy has yet to see any real pain other than a couple percentage points of GDP loss as people begin to cut back on spending. We haven't seen any large companies collapse, people losing their jobs at scale, or real declines in asset prices. Yes, we've seen some of the most speculative tech stocks like Netflix and Amazon drop, but we've also seen crypto and NFTs fall considerably, yet we're only just seeing the signs of the housing market cooling off, and the labor market is still going strong. So knowing what's coming, where's the best place to find value right now? Honestly, a lot of sectors could keep declining, especially if we start seeing layoffs. But what's for certain is that during a recession, consumer staples always perform well. What need can you fulfill that isn't being met right now, or that you can deliver even better on the needs aren't necessarily relating only to customers? I'm also talking about business needs. If you can find a way to avert another business, keep going, or even grow during this time, you're going to be rewarded in kind. Now there's a little bit of caution. I would usually recommend investing in utility companies or commodities as well. But this recession is unique. We're facing an unprecedented global energy supply shock, and this is throwing the energy markets into complete turmoil. There's no telling how much higher energy prices could go, and a lot of utility companies relating to energy already at stupid valuations. I would avoid the oil costs right now. There's no way to tell how quickly prices could come back when things normalize. These are all signs of economic inversion, of a recession leveling off, and the bulls coming back to town. You have to be ready to pivot fast if you start seeing the signs, as things will quickly pick up again. Keep in mind, the market always leads the indicators, and you'll never be able to perfectly time the market, so a healthy dose of DCA during this time would be fine. Now, as you know, if you watch my recent video, you'll know that I'm not personally a fan of the always DCA strategies, since I actually think it's BS. I prefer to invest in large lump sums during red days, or when the market is down to DC, and during our session gives you a way better risk to reward ratio than just buying blindly as the market rises to new highs. Now, let's get back to our favorite asset class, crypto and NFT. Is how will they fare during a downturn like this? Some projects, of course, will do well during our session, and I'll cover some of them on this channel. Unlike past recessions, we're facing a mixed bag of negative and surprisingly positive indicators and the mashup of economic turmoil. The labor force participation rate has been low for a number of years and is still on par with levels from 20 years ago. As energy and housing cost spikes, this recession will make the rich truly wealthy. As asset prices dip and rebound, the job market will mostly remain hot, fueling economic growth and the continued wage rises as living costs come down, resulting in a real standard of living increase over the next few years. Those who prepare themselves right now, accumulate up the cash needed to invest or build the companies of tomorrow, are going to achieve generational wealth. So if you're watching this video, you're being prepared way earlier than anyone else. You have asymmetrical information right now, because most people are not preparing in the same way that you will be if you made it all the way to the end of the video. Please don't forget to hit the subscribe button and hit the like button and comment down below. We're all going to make it. Cheers.